Okay, hello and welcome to a webinar from the Copper and Brass Service Center Association. Today we are proud to welcome Ann Riley, Managing Editor of American Metal Market Magazine. My name is Wes Huddleston. I'm the Manager of Education and Marketing for CBSA, and we'll discuss, give us an outlook for the global copper market using research from the Metal Bulletin research. She will also address some other issues facing the market in 2012. We're very excited to have her here. So during the presentation, I just remind everyone that you can send questions by using the questions tab on your webinar toolbar. I'll collect those questions after the presentation and read them to our presenter so we can get those answered for you. So without further ado, I would like to welcome Ann Riley from American Metal Market Magazine. Go ahead, Ann.
Great. Thanks very much, Wes, and thank you very much for having me, CAPSA and CAPSA members. I may know some of you. I've been with AMM for about 3.5 years now. I actually started here as our copper reporter. So right in September and October 2008, I saw copper prices start to fall off, and have been covering the metal markets ever since, and so I may take full responsibility for that very difficult period. I'm now managing editor over here, overseeing the whole publication, and actually do more reporting now on the flat-rolled steel side, but stay very in tune with copper. So hopefully can answer all of your questions here today, and if not, put you in touch with somebody else who can. So to start you all off, you're mostly familiar with American Metal Market, I imagine. We're a daily newspaper with about 45 unique stories a day, as well as a number of prices that people in the industry use. Our sister publication is called Metal Bulletin. They're based in London, and they report more from a trader's perspective. They have a research arm with in-house analysts, and so they put together these slides for us, which I will be taking you through today about what we've seen in the copper market recently, and what looking at what has happened in the past can help us figure out about what might be coming ahead. So let's see if I can progress the slides. There we go. So to start us off today, I mean, it's hard to see what's going to happen in 2012 without looking through what's happened so far, since history tends to repeat itself. If you look at copper prices in the last couple of years, you see that they have had quite a bit of movement, but it hasn't been unique to copper. As you know, all of the base metals, as well as ferrous metals, have seen a lot of movement. Looking on here, you see especially that tin and zinc got ahead of themselves quite a bit in the last few years, mostly fundamental issues, not actually speculative issues. Indonesian supply issues, they cracked down on their tin mining, as well as zinc supply issues. Hud Bay was having production problems. Horsehead had that big explosion about a year ago, as well as more material going into LME warehouses. So there's been a lot of movement, but we're often quick to blame the speculators, and it's actually not quite fair, as it goes across all the metals and often explained by some supply issues. You look through here, you can see that after that first major dip in October 2008, we saw a bit of a pickup, mostly due, they think, at that time to the Chinese stimulus package, which was estimated at that time at about $586 billion. And that did good things for market sentiment. It helped boost all the prices, but even more so, aluminum and copper were expected to see a big consumption boost, mostly because China's power transmission sector favors copper-clad aluminum cable, so any large-scale construction they would have been following through with would have meant good things to the red and the light metal. As you know, not all of that panned out, but certainly a bit of it did, and it didn't hurt sentiment either. Moving ahead, though, this chart only went until April. You can now see what has happened up through December of this year. And as most of you who touch copper every day probably know, the run-up didn't last, and we're now in a bit of a down cycle again. The question is whether or not we have bottomed out here. It's hard to say, and I certainly am not one who can make a prediction here. But at least what the analysts seem to be looking at is the euro debt crisis. I mean, that's really what is putting the downward pressure on prices right now. One, because if something happens, less copper will be consumed in Europe, and less of everything will be consumed, but also because it will just mean very bad things for market sentiment, for investor activity, and the more cautious people are, the more bearish everybody's outlook is. So the question is, we've seen a bit of a bounce in prices in recent days and weeks even. So, is there a new uptrend being reestablished or not? Unfortunately, it's hard to know that until we've gone a bit longer, but certainly something that's on everyone's radar. Now, if you look at slide 3, I have to apologize because it is a bit of a complicated chart. But what it looks like, what it looks to do is break down the metals, the base metals, by their marginal cost of production. And as you can see, copper far outweighs all the other base metals. In fact, only zinc and lead are also in the positive. Breaking this chart down, what it essentially shows is that most metals have already reached their pricing floor. Today, aluminum, for example, settled below $2,000 a ton for the second straight day on the London Metal Exchange. And at that price, it's not even economical to make aluminum anymore. At a number of Chinese smelters, at some U.S. smelters even, they probably won't shut them down in the U.S. right away because there are a lot of costs that come, laying off workers, shutting down, going into care and maintenance. But if they stay at this level, we might see a lot of aluminum production coming offline. The same cannot be said for copper, in that we're still well above the marginal cost of production. Even if prices were to halve, somebody could still make money, and quite a lot of it making copper. And so that's not really a concern on anybody's radar. And moving ahead to slide 4, what's interesting is that even though the marginal cost of production is so high for copper, and we aren't going to be seeing people shutting down because of price reasons, even with all of that, it is still one of the tightest metal markets out there, which is really what is providing all of that pricing support. I know that after weeks and weeks of falling prices, it doesn't feel like there's pricing support out there, but at least relatively, it is still a pretty tight market. So if you look at this, of all of the base metals, copper really has the strongest fundamentals altogether. And even looking into 2012 here, which is the light blue bar, in 2013, which is the orange bar, you can see that it's going to stay in deficit and then only barely come out of deficit 2 years from now. Compared to, say, aluminum or zinc, that's a pretty big difference. Nickel, we did have that period in 2010 and 2011 where it did fall into deficit. That's when those strikes were ongoing at Vale's Canadian operations. There were some other supply issues. But for the most part, the fundamentals of copper really are the strongest here. And I know it's hard to believe sometimes that copper is trading based on its fundamentals anymore. Sometimes there's an announcement of a strike and nobody responds. It looks like the speculators are really the main players here. But you can see that the supply and demand fundamentals are still very much at play and very unique to copper itself. So moving ahead to slide 5. Slide 5 actually breaks down this whole issue of speculative interest. And you can see, judging by the blue blocks essentially, where the funds have been active and where they haven't in the last year and a half or so. And you can see that they've actually largely pulled out of the copper market. Some of that's very tied to price, but it's a bit of a vicious cycle here that some of that price is very much tied to their interest. So in some ways, it's hard to know what came first, what prompted the movement. But you can see here, especially recently, as the prices have dropped off, a lot of speculators, hedge funds have exited their long positions, and the market really is at this point trading much more on its fundamentals than on speculative buying. That said, if very few people are holding net long positions, there is a lot of upside, and there's certainly a chance that they will return to the market and maybe in full force. And so everybody needs to be ready. There could potentially be a very strong fund-driven rally here. The question is whether that starts January 1st, whether that starts a year from now. A lot of that depends on the price. But remembering the chart we just saw, how tight the fundamentals are in copper, I would imagine that they will remain interested in this market and will come back in as soon as they have any indication that things may be heading back up again. So if you flip to slide 6, this This chart is just interesting because everybody always talks about substitution. Usually it's an aluminum-copper substitution they're looking at. I mean, as anyone knows here who creates fabricated products, if the price of copper races up to $10,000 a ton, as it did earlier in the year, and the price of aluminum hovers around 2,000, 3,000. Anybody who's putting that in their products, be it automotive, be it electronics, be it commercial construction, if there's a way to substitute out the higher priced metal, they'll certainly try to do it. Luckily, copper has a lot of unique properties that can't automatically be substituted away, but there certainly are places that it works, and places that they've been trying to do it. Recently, at least luckily for the copper producers, the substitution pressures have kind of come off, but if we see another run-up, they may start again. And when that happens, I mean, you need to find a way other than the price to sell the product. That really then comes back to copper's inherent property that it does conduct energy so well, things like that. Unfortunately, some of you may remember, especially those of you in the plumbing fixtures business, fabricating copper. A couple years ago, copper already started to lose market share to tubing, or to plastic tubing, and plastic companies have really made inroads into the market, and that's one place where we don't see copper really picking back up market share. No matter how low the price of copper may fall, plastic is much lower, and once you lose a customer, it's rather hard to get them back, especially once these companies are trained to deal with plastic. They don't want to retrain to deal with copper. So unfortunately, a lot of analysts believe that market segment is largely gone for the copper market, but there are opportunities here to make sure that aluminum doesn't take back over copper's share. So that's something that the market will be looking at pretty strongly the next couple of months and years. Flipping ahead to slide 7, this just kind of breaks down copper mine production over the last couple of quarters and years. And you can see that over and over again, mine production has clocked in lower than people had been expecting. There have been a lot of strikes. Anybody who has been following the copper market knows that Grasberg, which is considered the world's largest copper mine in Indonesia, co-owned by Freeport, finally came off strike yesterday, or at least the workers agreed a new labor agreement. But that's been on strike for. There have also been little bits here and there in Calawasi, throughout Latin America. All of these disruptions have meant difficult things for copper supply, and have in turn led to much higher prices. And all the analysis points to the average shortfall being almost 900,000 tons per year lower than people had estimated, and there's no reason to expect that might change going forward. So it may be very tight out there, particularly if demand in countries like China continues to rise, which could lead to some higher prices all around if you believe in the market fundamentals playing out. Speaking of mining and where material is available, this chart is actually very interesting because it talks about capacity utilization rates at mines. So one of the reasons there's been less output has to do with the strikes, as we mentioned, but another piece is that there's just simply less copper or lower ore grades being mined at the existing mines. Many of the world's biggest mines are old and have been mined for decades. We're now in less desirable zones of those mines, and it just becomes, you have to dig deeper and work harder for the same amount of copper. And so as you see from here, capacity utilization rates have fallen dramatically and are now much closer to 75% than they were to the 100% they once were. That's particularly interesting in that there have been new mines discovered, and new mines with very high ore grades. Unfortunately, the majority of them are in countries considered relatively unstable. The Congo is one you hear about quite a bit, Zimbabwe, a number of African countries, places where they could go in and mine a lot of copper very quickly, but there come such inherent risks, both safety risks for the workers as well as just financial risks. If you're a company and you want to set up a mining operation in the Congo, get it all the way through permitting just to have the country's government then come in and tell you that you don't have rights to that property after all, that has happened a number of times and has been well documented, and has certainly made some companies hesitant to set up operations there. So as a reason for that, countries with low ore grades but very stable governments and friendly governments, like Chile, for example, have been still seeing a lot of interest, even if their mines may not be the best place to be growing your business right now because of ore grades. I think people remember in November when Mitsubishi Corp purchased a nearly 25% stake in Anglo-American Sur in Chile for more than $5 billion. That purchase is now very much in dispute because Codelco thought that they were buying the share. But just the fact that a Japanese company was willing to pay more than $5 billion for less than a 25% stake in a relatively small Chilean mining operation, it just shows what kind of concern there is about finding, tier 1 assets given declining ore grades and some of this political instability. So moving along to slide 9, no outlook is complete without a breakdown of what's going on in China. I imagine many of you do business with China, or at least are intimately aware with what's going on over there. You can't be a global player right now and not be paying attention to China. So China has been seeing some issues with scrap availability. They're certainly trying to buy more, but there isn't always scrap being generated. If we're not making things over here, we're not generating scrap, and the winter certainly doesn't help as soon as the snow starts coming down and covering up those piles of available material. That said, Chinese demand is still pretty strong. The analysts all expect that growth will be around 15% this year in China. That may drop to a single-digit pace for next year and beyond, but still single-digit growth. We're not talking 1%, we're likely talking 7, 8, 9%, which maybe sounds low for China, but all things considered, compared to, say, an EU growth rate, which may be even in the negative, shows that China is still very much a factor here and can't be ignored. There's a bit of a lag on these slides. There we go. So on slide 10 here, just breaks down a little bit more detail about Chinese imports of refined copper in recent months. You can see that it's a choppy trend if you look at the chart to the right, but it has been, in general, an upward trend. The Chinese are known for being very opportunistic buyers. In fact, so much so that I remember during the market collapse in the fall of 2008, and not to talk badly about all Chinese buyers, it certainly wasn't an across-the-board phenomenon, but we talked to a number of people who had been selling copper scrap to China. While it was on the water, the price fell so sharply that then the buyers reneged on the deals and tried to renegotiate them right before they hit Chinese ports, which at that point it was more expensive to send it back to the U.S., and so they often got the cheaper deals. But the Chinese are very savvy. They aren't going to be buying copper unless they like the price or they like the arbitrage. So that's something to be keeping in mind as well. But from what we can tell right now, it looks like they are restocking again and maybe coming back in orders. Just skipping ahead to slide 11, the whole issue of restocking in China, though, is an interesting one in that they provide data, but sometimes the data is hard to read out of China and sometimes not even verifiable. When you take a look at the data here, you can see that China's apparent demand is on its way up, but when you actually break it down, it looks like a lot of that is restocking, not real consumption. Real consumption, which is usually estimated based on their output of semi-finished products, has actually been slowing to some degree, although still quite a bit higher than some other nations. So just in summary here, it's rather hard to know what will be happening next in the copper market. Sorry, my slide's forward. Everyone getting slide 12? There we go. 2, 4. You can see here the full different scenarios that could happen, and so China's really the key here. If they do keep growing, there will be some pretty strong demand, and that will affect the world globally. Europe is kind of the soft spot here. It could go one of two ways. Most people are hoping it will be a mild recession and will then turn around. but it's very possible it could very much go the other way. And if that's the case, it could pull down U.S. demand alongside with it, as well as just sentiment in the market. So that's really what people are watching here, China and Europe, and how they will both influence the U.S. As it's being kind of dragged along with both markets here. Skipping to the bottom here, I think what people are very interested in is where the copper price is going. We couldn't be easy on you and just give you a single price, mostly because our guess is just a guess, and it is contingent on these European and Chinese factors very much so. But the base case forecast from our analysts at Bulletin Research is about $8,900 a ton. That could go either way, though, if there is further tightening of credit in Europe, or if China doesn't show the kinds of recovery that we're expecting. It could be much closer to $6,000 a ton. On the other side, we may get back over into $10,000 a ton in the next couple of months or year. We've shown that we can run up that far very quickly, and if the EU pulls out of this faster than we thought, that very much may be the case. And so we're going to be taking some questions now, but I'll put up my contact information here. I'm happy to answer any follow-up questions by email or by phone. Chris Prentice is actually our copper reporter at AMM, and she's in the room here with me. Might be able to help answer some questions. So if you ever have any very specific questions about what's happening in the U.S. market, she's actually probably the best contact on that, as she is talking to producers and consumers of copper every day and is about as elbow deep as everybody else here is.
All right.
So happy to open it up to questions, and if you don't have questions now but want to follow up later, you can always reach us by email or phone. Thank you.
All right, good stuff. Thank you, Ann. I appreciate that. We do have a couple of questions lined up here. The first one is, how will a conflict designation for copper affect supply, i.e., requirements to declare conflict mineral content?
Sure. Well, that's a very good question, and some of that, unfortunately, is a bit up in the air, depending how exactly these final conflict resolution laws play out. But what we've seen so far, there have been some stipulations in bills that so far have mostly affected things like tin, tantalum, some of the minor metals. What it's meant for them is it's kind of been a pain. I'm not going to lie. A company like GE, for example, if they're using tantalum in one of their products, they have to now prove where that metal came from. And unfortunately, it's very rarely straight from the mine. Some of these products are maybe sold from the Congo to Belgium, where they're processed and then sent elsewhere and elsewhere, as anyone who's along the supply chain knows. And I've talked to people at GE, at big, at Intel, at computer processing companies, who have said they've had to hire whole teams to go and track down where their metal came from. And they've unfortunately often reached dead ends where they can track something back to Belgium, and it's sat there for 50 years in a warehouse. And the truth is the countries that are problematic, like the DRC, didn't actually exist as the DRC 50 years ago when this metal was mined. And so the question is, if it was mined before the problematic country with the country, is it free of the arrangements or not? And so I think there'll be similar problems with copper if something like that is pushed through. As you know, a lot of copper is mined in the DRC. Luckily for producers now, or people using copper now, copper mining in the DRC is only really picking up speed recently. It's something that has grown very rapidly in the last couple of years, but because it's been a more recent phenomenon, at least to this size and scale, should be easier to trace back some of these supply chains. But yeah, that's kind of a long-winded way to say I'm not sure, but I think it will be challenging, as it's proven in some of the other metals already.
Okay, excellent. Yeah, just wanted to remind everybody to use your questions tab on your webinar toolbar if you want to send those in. Just reminding you that one more time. Everybody appears to be watching Europe, not just the copper market, but everyone. And it mentioned that it's most likely slow growth or a small recession. But what types of things, incidences or occurrences, could drive that market down into a little bit of a deeper recession in Europe?
Sure. I'm going to put Chris on. I'll pull the phone a bit closer to her. Can you guys hear me? Is this a good level?
That sounds pretty good. Yep.
Okay, I'll try to speak up. So basically the question is, what could make things worse in Europe?
Right. What could actually drive it down and not just have a slow recovery or a small, short-lived recession?
I mean, I think that I mean, it certainly depends. I think you hear a lot of different things, but I think it seems like things are pretty bad there. So I don't see anything. I don't know how much positive news is actually coming out, and I've spoken with analysts. I mean, many people actually think Europe is already in a recession. So it's not just, like a slowdown. I mean, it's happening. We're seeing it right now. And what would sort of make that worse, I think certainly would be a continuation of the uncertainty going forward. I mean, that seems to be the biggest thing on everyone's minds, whether you're in copper or you're just living your life, is the fact of clarity going forward. You know, I think if people saw that that there was some sort of course of action that would eliminate some of the concern that we're seeing now, but I think, I mean, certainly what is the worst thing that could happen, the end of the euro, a depression. So I think if you see that, certainly it would be worse, but I think that what most people are saying is recession is happening, will likely happen perhaps, but it's not, luckily, hopefully, China will put out, and hopefully it won't necessarily affect the U.S. quite as strong. The data coming out of the U.S. is actually, I mean, in terms of overall sort of macro picture here, has been pretty good. I mean, when you look at the jobs numbers and that sort of thing. So, so I don't know, that was very long-winded, but I guess what I was saying is it's already pretty bad over in Europe.
Yeah, and to kind of add on to what Chris is saying, I mean, it's not so much about actual metal consumption, and that certainly is a piece of it. You know, I mean, it's hard to see commercial construction taking back off in Europe if there is so much uncertainty, but it's much more a sentiment-driven piece, especially how that sentiment trickles over to the U.S. I mean, everybody Chris talks to is buying or using copper in the U.S. You know, they're not buying loads and loads of it, but they're pretty steady. They're moving metal every week and every day.
Right.
The question is, you know, if you know, more countries default in Europe, if the euro is dropped as a currency, if more countries are downgraded by S&P, how that really affects people's mentalities and psyches over here, much more than actual their physical ability to do business.
Right. Okay. Well, here's another one. Any comment about the government's review of 200 series brass anti-dumping charges?
Unfortunately, that's one I'm not very familiar with. I should have known. We have a trade reporter here who deals with all of our imports and exports, and she's in Washington today meeting with a number of trade groups and finding out what's on their agendas. Her name is Catherine. Actually, whoever has that question, if they want to email her directly, I'm sure she could tell you everything you ever want to know about the duties. Her email address is actually CNGAI, Catherine Nye, CNGAI @AMM.com. She'd be the better person to answer that.
Excellent. Yeah, and I will say that the folks at AMM are always accessible for information and questions like that, and I definitely appreciate that offer. And so here comes another one. Current spot copper is around $3.25 a pound. Are you projecting a base price of around $4 a pound for 2012?
Sure, that's a good question. We, as reporters and editors, legally, unfortunately, aren't allowed to predict a price. But if you flip back to page 12, I could actually probably do it for you.
Yeah, you should still have control there.
Still have control? I'm trying. It's not going back. Well, you can see, and
there it goes.
I'd be happy to send this over later. You can see that our analysis base case forecast is, let's see, 8900, which, let me do the math for you real quick, put it in dollars. Yeah, so that brings it down to 403. So that's actually exactly what our analysts are predicting. I need to point out, though, that that is a 2012 average price, and so there's nothing to say that that's going to be the price on January 1st or even April 1st or May 1st when you look at it. But if that's their average price for the year, Very possible we'll be starting around the levels we're at now, but maybe well beyond it, a year from now. Keep in mind, though, we have our bear and our bull case, so it could be significantly lower or significantly higher. Although, to be fair, the bear case here of 6,600 isn't that much lower than we are today. So if you're surviving at today's prices, you could probably survive at that, which is about $3 flat.
Okay, excellent. Great. I just want to remind everyone, too, that we have another webinar coming up on Monday, more of a technical presentation from Dave Kirsch at Olin Brass. It's called Myths to Metallurgy. So just reminding everybody to join us again on Monday for that. Just seeing if we have any more questions here. That might be the last one.
Great. I'll open up that offer again, though. If people realize they have questions later, want to look over the presentation, think about it, we are always accessible, and if we don't know the answer, we're happy to put you in touch with the people who do.
Right.
Luckily, we often know the answer.
Right. And following this presentation, in about an hour, you should get another email with a evaluation that you could complete, and at the end of that evaluation we do have contact information for AMM, so you can get in touch with those folks if you have another question that, like Ann said, didn't pop in your head immediately. I'm also recording this webinar, and it'll be out there on copper-brass.org real soon, probably within a day or two, so we can go back and get that recording and share that with the rest of the folks where you work, so there is more opportunity to listen to Ann's words of wisdom here today. So
great. I'd also recommend to people, if they aren't subscribers to AMM, you can go to our website at amm.com. We have a 2-week free trial, which I'd encourage anyone to look up. I know we have a story tomorrow about the Hussey acquisition closing. We have something on what will be happening with the Quadra copper mining company and who may be coming in there. So a lot of things that are probably useful for CABSA members. So check us out. It's free to check us out. Unfortunately, it costs money to subscribe full time, but you can shoot me an email, and I'm happy to put you in touch with our subscription people as well.
There you go. Yeah, well worth it. So if I do have some questions here about if they can get a copy of the presentation, and I do believe you can send them a copy of that later on. So
I'm happy to do that. You unfortunately just have to shoot me a quick email. I don't have all of your emails, but then I'll send it right over.
Yep. Our survey will have a direct email link for Ann. If you get all the way down to the last question, you'll see that email link. So that'll make it easy for you, and also let us know what you think about today's webinar. This is still a fairly new program with CABSA, and we definitely are looking for more topics and how we can get better at this. So thank you all for attending, and thank you, Ann. Thank you, Chris, for putting this together with your team from London. That's a really great presentation and a great team from an awesome publication out there. So we definitely appreciate you guys. Thank you.
Thanks. So we're happy to join you, and we'll talk to you all soon.
That's right. All right. If there's no more, that is all for today, folks. Thank you very much.
Great. Have a good afternoon, everyone.
Mm-hmm.
Bye.